Looks like we are live. Welcome, welcome, welcome to another Properties and Beers. This is the end of the year edition, right? The final Properties and Beers for the year. If you're here, welcome, welcome, welcome. And today, what we're going to be chatting about is a few different things. So, firstly, welcome back to Properties and Beers. This is where we slow things down, zoom out, and really look at how property systems actually work. Not just the headlines, not just the noise. And before we get started, what are we drinking today? We are doing some of my favorite tequila, Herradura Plata. If you guys haven't tried it, get into it. I know it's a Saturday, right? And you guys are like, hey, it's the end of the year. There it is, Herradura Plata. That's what it looks like. Uh, let's give it a go. Already in the glass. One of my absolute favorites. Now, if you're here, come say hi. You know, tonight we're going to be talking about three things investors keep asking me about, and that is Canada versus Australia. And people are hearing about this big crash in Canada and why I believe that's not going to happen in Australia and how our market behaves very differently. The second thing is I've had a lot of people contact me recently about investing in self-managed superannuation and some of the strategies I see clients exploring, as well as Australia's housing supply pipeline. We're going to be talking about the quiet force underneath the actual prices because people are saying, hey, Australian property is quite high, etc., etc. It's actually quite cheap from a worldwide scale. But let's chat about why I believe growth will continue happening. So let's firstly chat about Canada versus Australia, and let's chat about mechanics, not just the drama, right? Canada is a great case study about what's happening at the moment. Not because it's crashed, because it actually shows us what it takes for prices to move meaningfully. And if you're just first hearing about Canada, what's actually happened recently in Canada is that property prices have actually gone down a little bit in the major capital cities. In the regionals, they haven't really been touched that much, but in the major capital cities, they've actually gone down a little bit. And people are like, oh, we're the same as Canada. Well, really, we're not. But let's chat about some lessons from Canada, right? In Canada, several forces have kind of lined up at the same time, right? We've had a sharp shift in interest rates, right? A very investor heavy apartment market. Now, if you've been following me for a while, you know that I don't recommend apartments. And a pullback, well, I'm not allowed to recommend anything that I suggest to people quietly that, hey, if you're investing in apartments, this might be the wrong thing to do. A pullback in liquidity after the COVID stimulus. When those things align, prices adjust, and that's just mechanics, my friend. And I saw a chart the other day which talked about money printing, and the more money we print, the more our housing pricing goes up. And at the moment, by the way, if you follow the mechanics of how money printing and housing pricing correlation is related in Australia, you'll find actually they're very, very similar. So why Australia behaves differently is that Australia's system looks really different. Our household income relative to GDP is amongst the highest globally, and that, my friend, is a servicing engine, right? The total residential property value here in Australia is $11 trillion, and that might sound a lot, but just bear with me. The mortgage debt, by the way, for that is only 20% of that. That's like saying 80% of the house is already paid off at the system level. So we're going to find that compared to places like Canada, where they were already very highly leveraged, we've only got 20% leverage in the game. So Canada's leverage was really meaningfully high, and especially in apartments, which is exactly where the adjustments concentrated. So we're finding people that had land component didn't really matter for them too much. And so I'm not trying to be optimistic or pessimistic. We're talking about structure and reality because different structures really behave differently under pressure. And so here's some perspective for you around debt. You'll often hear people talk about Australia's debt numbers, but they rarely talk about the other side of the ledger. They rarely talk about the 80% that we've already kind of paid off, right? You don't buy a Maserati unless you can service it every year. Australia's income profile servicing means the capacity really has been a strength of the system. And, the end result is context creates calm and perspective creates confidence, right? I'll say that again because it's so powerful. Context creates calm and perspective creates confidence. And that, my friends, is part of the name of the game. And uh, let's move on. By the way, if you've got a question about Canada and my thoughts around what that is, what's going on there, drop me a line in the chat while we're live, or even after we're live. I'm more than happy to answer it. I've got my own strong views about why we're definitely not like Canada. And I think if you really look at the apartment market, that's where the concentration of craziness has occurred, right? So let's chat about Now, SMSF, right? We're having a lot of people who approach us about investing in property in SMSF, and let's chat about the positive strategy around it. Now, quick note before I go further: this is general information only. I'm not a licensed financial advisor. I don't pretend to be one, so I can't tell you whether investing in SMSF, investing in property in your self-managed super is right for you. All I can do is show you what properties that are available out there and what strategies others are doing, and also I can chat to you about the lending, what you can and can't do. So I'll talk to you about speaking of strategy, right? Let's chat about one of the strategies we're working with a client to do. His strategy is that to purchase a property now with leverage. So he's got, 20-30% deposit in his self-managed super. He's going to take that now, and we've positioned him in a place that's 12 kilometers from the major capital center in something with land component, right? So there's land component in there. And we're going for growth perspective. And so hopefully in about 5 years' time, he's going to have so much growth that he's actually going to be able to sell that property and purchase two more. And that's one strategy. I see a lot of clients exploring because purchasing one property in SMSF in a few years' time, they've got another two in SMSF. That is really what we call exponential growth, right? It's called redeploying capital, and at its core, right, I like to call it the capital recycling strategy. Where one asset becomes a foundation, your time, income, and growth do all the heavy lifting, and then your structure just evolves. And you know what? It's not about speed, it's actually about the sequence. And so the other thing is SMSF property is becoming really popular because it continues to attract attention because it's tangible, like it's physical, right? It produces income into the fund, and really it fits well with long-term thinking. And roughly 15 to 17% of total SMSF assets around Australia are invested in property. Then about 30% of self-managed superannuations hold some form of direct property. So what I'm talking to you isn't about fringe, it's actually established, right? And so most SMSF borrowing is tied to property, which tells you something important, that people see property as a long-term duration foundation asset inside super, something that they're comfortable leveraging against. And we used that leverage example earlier. Now, some of the pitfalls I do want to talk about. A lot of people purchase apartments in self-managed super. I'm going to shy away from that simply because I've given you the Canada example, and we should look at not investing in apartments simply because of we've got multiple examples around Victoria, Queensland, Canada, right? This is just investing in apartments, in my personal opinion, is a little bit risky, right? Unless you're aiming for that upper echelon, or there's a crazy deal on at the moment, et cetera, et cetera. But as a general rule of thumb, I like to see something with land component, even if it's a townhouse, right? Now, with someone at super, you can't do a house on land unless it's presented as a single contract. In which case, you do have to make sure you hold the right financial structure and know that the financial structure you have, you've got enough money in your superannuation for that, right? So now let's chat about the housing supply pipeline. Uh, Let's talk about the quiet force that ignores most headlines, and that's supply. Australia's not short on demand. What's short on is a deliverable, feasible supply. And that's what at the end of the day, supply and demand, economics 101, that's what property grows with and doesn't grow with, right? So we've got planning timelines, construction costs, labor constraints, all tradies and unions, etc., etc. All of these means that new housing doesn't arrive quickly. In fact, what was it? I was listening to Mark Boris's podcast the other day. Shout out to Mark Boris. And he was mentioning something along the lines of, and I'll do some research, that we spend the highest amount per capita on red tape than most other OECD countries in the world. And I just find that crazy. And a lot of that is geared towards housing because we've added this to housing, that to housing. There's no such thing as starter housing anymore. Says pricing of housing is going up because there's no starter housing. You don't see these, a block of areas where you've got these 2 and 3 bedroom, single bathroom, 2 bathroom, little villa type situations. Everyone's building these double story, 4 bedroom, luxury townhouses, right? That's what's happening out there. So, the thing is that even when policy changes, supply really responds slowly, and slow supply is why prices tend to be resilient and not volatile. This, my friends, doesn't mean that prices only go up. It means that the system adjusts gradually, not violently. Now, let's bring it all together. But before we do, I need a beverage. So when you hear like Australia's the next Canada, or some other crazy headline like that, the better question you should be asking is that which parts of the system are actually the same? because markets don't move on fear, they move on structure, liquidity, income, and supply. And when you understand these levers, property becomes a lot less emotional and a lot more strategic. Now, before I close, there's been a thought that's going through my mind, which I might explore over the next few properties and BS. And please drop me a line if you want to know. I'm noticing more and more that large funds are getting into the space of property. We had, I think, there was, I think, $1.2 billion paid for Hamilton Island recently by a fund that was a predecessor to BlackRock, and it's really interesting to see that larger and larger funds are choosing to invest in property, therefore consolidating it all centrally. So. I'm personally on a mission to decentralize that. I believe the average investor can and should fix some of society's issues. They can and should invest in property, because that, my friends, I believe is probably one of the easiest ways to get into financial freedom anywhere in Australia. Right? And that's my personal belief. Of course, everyone's got their own beliefs and their own thoughts, and I'm not a financial planner, but I'm just finding it really interesting that we're seeing larger funds purchase places like Hamilton Island, and we're seeing the concentration of funding in a lot of these places, which, you know what? I'm not sure if my gut sits right with that, and I believe that the everyday person should be able to invest in property, and we shouldn't, own nothing and be happy, right? That shouldn't be the name of the game. We shouldn't be trying to rent everything. This is, I guess, from the heart at the moment. We, in my opinion, should be owning our sovereign properties, if you know what I mean, without going into some of the other crazy strawman theory, etc., etc. I'm not going to go down that line of thinking right now, but I believe that it's a fundamental right of ours, especially in a great country as blessed as we are to be in Australia, to actually be able to invest in property and provide housing, the supply that's needed for all the demand that's there. So um, let's close it off for the day, right? So that's today for properties and beers. Whatever's in your glass, the goal's always the same: clear thinking, long horizons, and calm decision making. My friends, it's been a pleasure speaking to you throughout the year for properties and beers, and I'm looking forward to catching up with you in a brand new location. Come early next year. And if I don't speak to you, have a happy new year. Merry Christmas to your families that have just passed. And looking forward to catching up. Catch you later.